Hello friends and welcome to Kirti Rane Academy. In today's video, we are going to learn about the topic Status and Duties of a Financial Manager. But before we start this video, I would like to remind you that if you want the explanation of this exact same topic in Hindi, do not forget to check out my channel playlist. You will get the same exact topic explained in Hindi by very own me. So let us get started with today's video. In today's video, we are going to learn about the topic status and duties of a financial manager. Now, what exactly is a financial manager? Financial manager is the one who looks after the finance of the company. How do they need to procure the fund? How are they going to invest it? And are they going to give it as a dividend, or are they going to keep it as a retained earnings and save it in reserves so they can use it for their future in the future? Now, if we look at the technical terms or in the real life, a financial manager is none other than the CFO or the Chief Financial Officer in a company. Now, the role of the financial manager, as we have seen in the earlier parts, that it hasn't changed from a very different times, right? It has gone from just viewing the account to keeping the record of account to actively take part in decision making. Chief Financial Officer is now not just the one who keeps the historic record of all the transactions happening in the company and saying no for spending, but also an co-pilot to our CEO, right? The Chief Executive Officer. He will actively take part. He will look into the project. They will see that are there major risks? Is the return on investment beneficial for the company? Is it beneficial for the long term or short term? Do we need to invest in the following asset or not? Right? He is actively taking part in today's world. In today's video, we are going to look at these major 3 points. The first is the status of a financial manager. What exactly is the financial manager? What is the worth of a financial manager in the company? The core operations or duties. Managing the 2 arms. Now, what are those 2 arms? If you have watched my previous video, you will get an idea. So, please comment it under the section if you remember it. And third is the emerging role of a financial manager. So, let us look at these points one by one. But before that, please take a screenshot of this slide so you will have notes for yourself. Now, moving on to our next slide, our first point over here is the status of the financial manager or the status of our CFO. Now, what exactly is the status? Let us read it through. A CFO enjoys an executive C-suite status, ranking alongside the Chief Operating Officer or the COO and reporting directly to the Chief Executive Officer or the CEO and the Board of Directors. Now, CFO status is alongside the Chief Operational Officer, right? So, both of the Chief Operational Officer, they look after all the operations of the company. Now, CFO status is alongside those and he would report directly to the CEO or the Board of Directors of the company in case any major financial decision is about to take place or they should have been taken. Now, what are the major status of how can we categorize the status? So you can list it in simple points. So the first point over here is the ultimate custodian. The CFO serves as a definitive authority on financial data, corporate governance and risk mitigation. Now what exactly does the CFO does? Now he serves as a definite authority. Now what does it actually mean? It means that he will have the sole authority over the financial accounts of the company, right? He will look after whether on the balance sheet, the P&L account, right? And all the other financial accounts. He will have the authority. He will check. He will audit all the things, right? So that's one of the major. He is the major custodian of the financial accounts. The second point over here is the moral compass. Now, what exactly do we mean by CFO as the moral compass of any company? The CFO holds an independent status that answers to the external stakeholder, regulators like SEBI or SEC, and auditors ensuring corporate transparency and ethical financial practice. Now, CFO as a moral compass. Now, what exactly? We have already seen that as a CFO or as a financial manager, the role does not limit to just the recording of all the financial transactions. They will also have to ensure that have they not made any mistake, right? So they will also do the auditing. That means they will look that each and every transaction that I have listed in the books of account has a proof of invoice or any payment thing, right? So every single transaction will have a proof. So they are responsible for the auditing. They are responsible for the rules and regulations which are given by the SEBI and SEC, right? So they will look after that. So this is one of the major status or major role of a financial manager in any company, or we can say the CFO. So now can you please take a screenshot so we can move on to our next slide and our next point. So in our next point, we are going to look after the core operational duties of the managing the two arms. Now, if you remember in the previous videos, we had talked about what are the two major things that a CFO handles. That's correct. It's the treasurer of the financial things and the controller of the finance, right? These are the two major arms or the two major functions of any financial manager or the CFO. Now we will take a quick look at those as well. Administratively, a CFO oversees the entire financial machinery by dividing operational responsibilities between two criteria specialists, the treasurer and the controller, right? So if you do remember, please write it under the comment section. What exactly is the role of a treasurer and what exactly is the role of the controller? First of all, we will look at the role of a treasurer. Now, a treasurer duties or the outflow and the inflow master. What exactly do it do? They look after how much cash have came inside the company and how much cash have gone outside the company. How have they procured the funds and how are they utilizing inside the company? That is the role of a treasurer. Headed by the treasurer, this arm forces the managing money as physical assets, securing capital and mitigating external risk, right? Here we can see the main points. The managing money as physical assets, right? They will utilize the money to this maximum efficiency. Securing capital, that is the procurement of funds, and mitigating external risk. How nicely or how carefully are they managing or investing their money in other assets, right? So please take a screenshot of this slide so we can look into the more details of the treasurer. Here we have the more duties of the treasurer. The first duty over here is the capital structure management. Now what do we mean by the capital structure? I have repeated it over and over again. I will tell you once again. The capital structure of any company, it means the mix of the equity capital and the debt capital. In what proportion are the equity and the debt capital exist inside the company? That is known as the capital structure. Now, CFO also looks after its management, right? If they want to invest in a new project and they need to procure some funds, are they going to take an equity fund or equity capital or debt capital? Are they going to take a loan? And how do they decide it? By the simple concept of wealth maximization. Which of these two things will generate a higher return or will increase the EPS or the earning per share of the company so that the shareholders get most of the profit, right? So which of these things will increase it, and based on that they will take the decision. Therefore, the capital structure management. The next is cash and liquidity planning. Now, what do we mean by cash and liquidity planning? We have seen this point as well. It means that to determine how much of the cash are they going to invest and how much are they going to keep, right? This should not be done like all the cash has been invested in the fixed assets or the current assets and the company does not have any liquid cash to pay the day-to-day expenses like payment to the suppliers, paying the electricity bills or paying the remuneration to your employees. the company needs to make a balance so that none of the funds sit idle in the company, but also they have enough funds to continue working on day-to-day basis. So that was cash and liquidity management. The third point is investor relation. Now, what does a CFO do? They will procure the funds. Now, there are two types of procurement, either through the equity or through the debt, right? So both of these would be the investors of the company, right? The equity they will get and share of the company, right? The ownership of the company, and in debt they will get the interest, right? Now the CFO also has to maintain relationships with their investors so that they are assured that their money is in right hands and is utilized very effectively and efficiently. Their money is not going to waste, and they will definitely get their share of the profit or their share of the interest on their amount. They will definitely get the price value of their money that they have invested in the company. So that is what we mean by the investors relation. The fourth point is risk management. Now, what do we mean by risk management? Now, the company cannot only rely on various projects and assets to raise capital, right? So they need to invest their excess amount in something, right? So how can they invest? They can invest in the financial market or the forex exchange, right? The foreign exchange or the market, right? They will take things like hedging, right? They will do things like hedging so that they can make sure that the return on investment is the highest, right? This is what they mean by the risk management. They will look into the thing that is investing in this is giving me enough risk. Is that more riskier for a company? Are we getting the return on compared to the risk? So that was risk management. Please take a screenshot of this slide so we can move on to our next point. Moving on to our next slide, we have the controller duties or the accounting and tracking management. Now, as the name suggests, controller duties means controlling the flow of the financial management. Are we not spending excess on the said function? Are we going in the loss? What mistakes have we made that made us went into the loss, right? So these are the duties of controller. Headed by the financial controller, this arm focuses on internal compliance, data integrity, and recording transaction. These are the three important words. Please pay attention. Now, what are the functions or what are the duties of a controller? We will look into that. The first duty is the financial accounting and statutory reporting. Now, a controller will keep the financial records. They will keep the books of accounts. They will maintain the books of accounts. They will maintain all the ledgers, the balance sheet, the P&L, the trading account, and will report it to the CFO, right? So under CFO, there are two people, a treasurer and controller. Controller will keep track of all these things and will report it to the CEO. So that's what we mean by financial accounting and statutory reporting. The next function of the controller is cost accounting and budgeting. We all know that cost accounting is a method by which the management controls how much cost do they have to incur, right? So they look into it. They will see how much cost have been occurred. They will, in future, they will plan accordingly. They will budget accordingly, right? So if, let's say, you have expenses of 1 lakh rupees in the past year, you will definitely know that in the coming year, there were the minimum expenses of 1 lakh rupees. So you set aside a budget of 1,50,000 rupees for the expenses, said expenses, and etc. So that's how the controller will look into the financial records. They will use various tools like the cost accounting and prepare budget for the upcoming year for the company. So these were the two functions. Now we will look at the more functions, but before that, please do not forget to take a screenshot of this slide. The next function of a controller of the financial controller is the internal control system. It establishes strict workflow. They will ensure the financial checks and balances to eliminate any risk of errors or fraud inside the company. They are the ones doing the auditing, right? So they will check that each and every single transaction has invoice to back it up, right? So this economic transaction actually happened, and we are not actually doing any kind of fraud, or there aren't any single error in the books of the finance. So these were the duties of a controller. With this, our second point completes, and now we will move on to a third point. The third point is the emerging role of financial manager. Now this was a traditional or a textbook role of any financial manager in a company that they are expected to do, right? Maintain the books of account, to check whether there are any frauds or errors, to check whether the following investment will give them return or is it too risky for the business, etc. So these were the textbook duties. But because of the new age, the globalization, the digitalization of our technologies, the role of financial manager has also been upgraded. So let us see how. Driven by the rapid digital transformation, global automation and shifting economic landscapes, the role of the CFO has expanded far beyond traditional bookkeeping boundaries into several emerging mandates. Now, what are these emerging mandates? We will look into it. Before that, please take a screenshot of this point. So, what are the extra roles which the CFO has gained through the digitalization? Let us look into it. The first role is from the CFO has shifted from being the scorekeeper to a playmaker. In earlier days, the role of a financial manager was just to keep the record of the financial account. They will see that this transaction has happened, so they will have to keep a record it in the books of account. But right now, they will look into the books of account. They will see how much are they going to invest it in the future. And with that, they will analyze the investment, right? With the various tools like IRR or the ROI, right? So they will calculate it, they will analyze the investment, and they will take an active part in the decision making. So they went from being the keepers, right, to just maintaining the books of account to actively taking part in the investment decision, right? So the modern cloud computing or robotic process automation, the RPA, instantaneized handling manual accounting transaction and data reconciliation. We all know with the help of various technologies, for example, tally accounting, the transaction or the bookkeeping has been transformed from the written pages to the computerized world. And we also know that there are many systems which automates these transactions. For example, if your company has a fixed amount of fixed cost, right, that incurs every month. Every month you have an electricity bill of so and so rupees. So it could be automated and automatically installed in the books of account, right? So this has already taken place in today's world. The CFO no longer spends time manually tracking numbers. Instead, they focus on value creation, using data to identify new market opportunities, increase profit margin, and shape business strategies. In earlier days, the CFO was itself so busy in keeping a track of each and every records. They will have to check every single receipt. They will have to log in the entry. With that, they will see in which ledger would the entry go. But right now, with every single transaction that you pay online, or let's say there is an e-invoice, the e-invoice itself automates an entry into the automated accounting system, and they will automate it into the ledgers and the final accounts. So the CFO is now not tied to just handling the books. Now they will invest, they will look for the opportunities that where else can we invest the funds sitting in our company. Are there any good opportunities, etc. So this was all in this point. Please take a screenshot and we will move on to the next point. The next point of the CFO is that the tech-savvy analytics leader. Now what do we mean by tech-savvy? Tech-savvy means they know the technology, they know how it works, right? So in the modern financial managers are increasingly data-driven. They collaborate deeply with Chief Information Officer or the CIOs to deploy predictively financial analytics, AI-driven forecasting method models, and automate ERP workflows. Now, The financial office, the chief financial officer or the financial management, the manager does not work alone. They will tie up with the chief information officer. It means that they will tie up with the current technology, with the increasing use of AI. We all know that the transactions can be very well automated. It can be any financial future decision can be instantly analyzed by an AI. So they will tie up with the chief information officers. A modern CFO needs to understand how data pipelines and visualization tools scale to extract actionable commercial intelligence from raw operational data. In the earlier days, the chief financial officer will himself look into the things. But right now, if you just do a prompt for an AI, so that they know that if you are investing a certain sum in such following, let's say, industry with certain kinds of conditions, like the inflation rate is as much and the current trend of the market is this much, is it beneficial for the company or not? The AI will give the answers in seconds, right? So the CFO now does not just rely on his own intelligence, but they also know that where do need to collect the data. In earlier days, it would take months to gather the market information, but today we can just take a market survey in just few days, right? So you'll get the entire market survey data in a few days rather than or years or months of hard work. Please take a screenshot of this point so we can move on to our next slide. The third duty which has been increased in the financial manager is the strategic capital allocation and M&A. Now, what do we mean by this? Let us look into it. The emerging CFO behaves like an internal investment banker. They'll run algorithmic scenarios planning models. What if the raw materials spike 20%? Is it still beneficial for a business? Do they have to look for an alternate source or etc.? And act as the core decision maker behind the mergers and acquisition or M&A. What do we mean by mergers and acquisitions? Mergers when two of the company come together to work on a project. And acquisition is when a larger company would buy out a smaller company so that they work for it. Now, let's say a big IT company or a smaller IT company in which they have been developing a new AI model have been acquired by a larger IT company, and now the AI model is now beneficial for the larger company, that is the acquisition. Now, what happened earlier was the CFO would run algorithms like what if this price rise spike happened, what if the inflation rates to be go up, etc., right? So is it still beneficial for us to outsource the certain services, or do they have to make it inside the company? Now, if they are going to make it inside the company, there are two ways. Either they have to open a new branch, but that would take a major chunk of investment. So they can either merge with another company that provides them with that same service, or they can acquire another company so that the services can be taken under it. So this is how a CFO would operate. Now, please take a screenshot so we can move on to the fourth duty of the CFO or the Chief Financial Officer. It is the ESG and non-financial reporting. Now, with the current conditions, we do not just focus on the monetary data of any company. We also need to focus on the non-monetary transactions or the non-monetary events in any company, right? So, how much are they going to do the CSR, the corporate social responsibility, etc. With the global regulations increasingly mandating transparency, the CFO's reporting domain is no longer strictly monetary. Modern CFOs are now tasked with measuring, auditing, and presenting environmental, social, and governance, which is the full form of ESG metrics such as carbon footprints, supply chain sustainability, and diversity compliance, with the exact same quantitative rigor applied to the standard balance sheet. Now, if you take a look at any annual report of any of the company, in the previous year, it would only contain that how much have they invested, how much of investment have they done, how much of the sales have they done, is there any kind of loss, have they merged or demerged, right, invested or disinvested, etc. But in today's annual report, if you take a look at annual report of any company, they will also include facts like how much social responsibility have they done in the year, how much of the carbon footprint are they going to produce, how much of the employees have stayed in the company, how much have they progress have they done in the non-monetary terms. The CFO now not only deals with the monetary transaction but also deals with these non-financial things. It's exactly same as how they would deal with the financial things, right? They will also plan on how to manage their carbon footprint and how to invest so that their carbon footprint does not go beyond a certain level. So this is how an extra responsibility was on to CFO with the rapid modernization. Please take a screenshot of this point. Now let us look to the next point, which is the modern reality. The financial manager looked backward at what happened. The emerging modern CEO looks forward at what is possible, converting raw corporate strategy into sustainable, quantified economic reality. So what happened? It is, let's say, this line is a summary of this whole point or the whole chapter, you can say. In the traditional sense, in the past, the financial manager only looked into what happened, which transactions took place, how much sales did they made in the previous month, etc. They will list, they will keep an historical record. But in today's, the modern emerging CEO will not just do this. He will look into the future, right? He will see that how much do they have to invest. Are they going to need another plan? Are they going to need another investment? Do they have to invest so that they gain XYZ return, right? So the traditional duty of a financial manager, which was just looking into the accounts and keeping the track of accounts, is now extinct, and they are now actively taking part in the decision making and the growth of the company. With this, our topic of the status and duties of a financial manager has completed. Please take a screenshot. With this, our video completes. Now, before ending the video, I would like to remind you that if you want the same exact topic explained in Hindi by me, please don't forget to check out my channel playlist. You will get the same exact topic in Hindi. Thank you for watching this video, guys. If you like this video, please like this video, subscribe my channel for future updates, comment under it how do you like this video, and share it with your friends. Thank you.